Hello folks, LA Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, LA here. I've been on vacation and just getting back, so what I want to do here is bring you up to date on some of the critical things that are happening, in particular in the SOXX. And so I've brought that chart up first. So the first thing to notice here is that, this has been a very bullish trade, for a long time. If you go back here on the monthly, you can see it, nice big move up, some consolidation, distribution, if you will, and then a big, massive move up. Now this move from here to here is a bit ridiculous. And that's what needs to be corrected, and it's starting to correct already. And you can see that over here as you look at the weekly chart. Actually, let me blow this up because I want to show you something from a candle standpoint. What's important? The first thing is, when you're looking at this from a candle perspective, you had a low here, right? Low back here. Right, this was your breakout, this area here, and a massive move up. I mean, just massive. That's a double. It's a double in 2 months. That's huge. Then what, and let's go back. I've been watching for a reversal for a long time. I thought this might be the reversal, right? But then you got the big, strong push down on volume, right? And a hammer. And what do? They drive it higher. And when you have this momentum, it's hard to get the first break to do something. But this one is important, this one here. Why is that? Well, because it's a bearish engulfing. It engulfs the full candle prior to it. And then you get the exact entry that you would want, which is the test of the prior bar's high, yet it can't get over the bearish engulfing. That's the entry. I mean, that's the perfect entry. It's hard to draw it up better than that. And what do? You get a fast push down. Now, can this bounce up? Yeah, probably will, right? So let's go to the daily and look at that. And I'll blow the daily up for you. And what do we have over here? Well, you had this fast push down, and these are fairly significant. This is what, 6.5% roughly, 5.5%. So you drop about 12% in 2 days. That can get a bounce, and I'd be surprised if it doesn't get a bounce, right? Where can that bounce go to? Well, you have to look at these bars over here, which are your high volume bars. And so these two right here, right? Those are the two I'd focus on. So bounce up to the test, the tops of these two, to me would be the logical place. If you notice, that kind of is the bottom of this bar, the bottom of this bar, right? The bottom of that bar, that's the logical place. And so somewhere between 580 and 587, it looks like, 588. Somewhere in that area is probably where the bounce should take it to. And then it should try to flip and roll back over. What it's trying to do is come back and test. I'll put the retest regen zones up. It's come back and test this retest regen zone, which is off this swing point high. Now notice this was already tested once here on volume. And so I would not be surprised if it breaks this down if it gets the bounce prior to the move. So in other words, you get the move back up, maybe it takes a bar or two, and then you roll back over and you flush this, right? And then you're heading back down to these two swing point lows. And so to me, that's the way this thing is set up. Now, the good thing is that so far, it hasn't mattered to the market, right? The market is just rotating elsewhere. And so all the money that's coming out of here is going someplace else. And if you look at the MTTFs, they're also telling you that you need resets, 87, 85, right? And so to get this break would mean that we'd have to break this swing point low. That price point's 477. and we're at 566, so 90 points down. That's another 10, 15, about 15%. I don't know that that comes straight away. Let me get that number again. 477, which is probably this one. Yeah. I don't know if we get that straight away, but we definitely could try, right, and break it. And so, you know, it's certainly possible, I guess, is what I'd say. And if you think about it, it's about half the move down, not quite half the move. So you're, you know, if you're doing fibs or something like that, you're going to be between the 50 and the, you know, 60, what is it, 61.8, I guess it is, if I remember right. And so, you know, that all makes sense. And so that to me kind of is the target. Those first you try to break here, then you go to those two swing point lows. If you look inside this, let's just go look at the big holdings inside of it. MU is telling you that. Now, it doesn't have quite the same structure, but it's still coming back. Notice on it that you've got a buy zone here that hasn't been tested, so I would expect a buy there. If and when you get past that, you have a huge buy down here, right? That would definitely be a place to buy this thing. You know, because the AI trade is not dead. It's just got way ahead of itself, right, in terms of the chips. And so they're going to have to correct. Let's go to the next highest weighting, AMD. AMD actually doesn't look that bad. Matter of fact, doesn't look bad at all. Can it come back? Yeah, it can. You can see here it's kind of trying to top, so it should come back some. But still looking pretty good. AVGO, this one's broken down. You had earnings and then a breakdown on earnings, and it's just continued to escalate down. Maybe it gets a buy here, maybe not. I don't know. It needs to correct, and it's correcting, just like many of these need to correct and are correcting. NVDA, the king of the AI. 188.43 is the key number. Looks like it's going to test it and try to break it. I don't have a strong opinion here. I think that you're just in a consolidation. NVIDIA is not going to skyrocket like it has in the past. More or less go sideways and, you know, with an upward bias over time. Next one, Intel. This one went stupid and they're starting to correct finally. Yeah, nothing special to talk about, but it is correcting. And let's go to MRVL. Now, this one was kind of a ridiculous one. NVIDIA's chairman came out and said, you know, this could be the next trillion-dollar company. It was sitting at about 300 billion at the time. And this is correcting and starting to close this gap. It's going to close this gap, probably get a bounce out of that. The low here is where I'd be focused on. What is that price point? 195. Yeah, so I think you can come down to that, close the gap, and get a bounce off of that. But it is correcting as well. So in general, the point here is the SOXX is correcting. It's not crashing the market. It's probably not going to crash the market. Now, if the SOXX were to crash, then yes, you're going to get ripples in the market. A faster move down here is going to escalate into the market itself, the general market. Is that the likely case? Probably not. I mean, you're going to get big pullbacks. I mean, just look at Marvel. You've already gotten 22% pullback in 2 weeks, right? These things are going to bounce more than likely, given how strong they were. But they've got a lot to give back, you know, just to get back to like 158, which is like a 50% haircut almost, 40 plus, would be normal in this market, right? Where's the normal spot? Well, your retest region is always the normal spot. That's way down here. You know, that's not going to happen anytime soon, but that's a long way away. Just on your daily, it's in the 170 range. You know, so a lot of air in this, and these things are going to come back. So be careful if you're playing in this space. Money is moving out of here. It's moving elsewhere. You want to go elsewhere. Where's elsewhere? Biotech, healthcare. There's other areas, financials. That's where the money's going, and that's where you need to be focused. See you. Take care.